Eric Mother to Mother.com. Let's take a look at SID, which is down over the last 4 weeks and down substantially. We can see that this has moved the stock from about 3.75 to the current lows of about 1.75. That's a huge drop. In fact, if you take a look at the monthly chart, you can see for the month of May alone, it's down about 52%. Now, why is it down so much? I think if you go to the monthly chart, on a long-term basis, you might be able to understand why the stock hit resistance here at about just under $4 and has pulled back since. In fact, there's a simple line at about 61.8, somewhere around there. So again, this line happens to be at about 61.8 on the monthly, and you can see that during the period when the stock was moving well, so this period here in the early 2000s corresponds with a breakout above 61.8, which was a breakout to all-time highs on the monthly RSI, and the stock would go on to show support on that line during short pullbacks when it was having this major run, and again here for this support line. So you can see that that was good enough to keep the stock on an upward trend again during the 2003 to 2007 run, and ever since it broke below that right here, this has been a problem for the stock. So since it broke below that level, and this was sometime in 2008, so the break there brought the stock off the highs here, let's call it about 13. It became resistance during this period here, which is somewhere around here in the mid-teens, and here again coming back in 2016 we hit that line with uniform activity. In other words, we've been rejected at about 61.8, which might be the reason why the stock did come into resistance after a nice run off the lows of early 2016. So coming back, having a nice couple of months, but now it hit resistance right there, and we see the end result, which is a pullback. So make sure that you're looking at monthly charts, because sometimes they do give you an idea as to what is going on a long-term picture, so you can be able to avoid some of these clearly defined resistance levels whenever you own a stock. So just here we can see that the problem here is that the stock has run up over the last couple of months, come back and hit that level. That line so happens to be at about 61.8. Anybody who was watching that should have been expecting some type of resistance. There's also another way to look at this, which is uniformity, which is this break here, recent break in 2011, which brought the stock off the highs here at about $11. You can draw a line from there, and again you can see uniform action rejection above the red line and back below it. That was also another red flag and another sell signal. Eric Mother to Mother.com. As always, good luck, peace, and blessings. ESCS.